All right, y'all. Let's check out the lighting, check out the audio. We're going to be covering this live stream. We're going to be discussing our strategy for 2025 when it comes to credit cards, when it comes to building our new banking relationships, how acquiring new credit cards and maximizing the existing credit cards and the existing banking relationships we have are going to work towards advancing our personal finances and business finances if you're in business or an entrepreneur. So we're going to be talking about the best use cases for credit cards. We're going to be talking about the not so efficient use cases for credit cards. And then we're going to be diving into how to strategically go about building out better banking relationships with more financial institutions, maximizing the existing relationships that we have. We're going to talk a little bit about the economic factors going into 2025 that are going to influence our banking relationships, our finances, our access to capital, credit card access, et cetera. We're going to be talking about the underwriting process and how things could be affected. There's a lot that will be going on in 2025. And as you can see at the time of this recording, it's the very end of August. So we're basically halfway through the third quarter of 2024. So we basically have a few months left in the year, and it's going to be game time for 2025. So I wanted to start this off by going into the use cases for credit cards. So made a little quick list that I want to cover, and then we'll kind of dive a little bit into, the not so effective use cases that have gotten a lot of traction, unfortunately, in the, financial space in the last 5 to 7 years, as far as not the healthiest ways to use credit cards. And all of this is also going to include a response, a direct pioneer response to one of my pioneers who asked the question just a couple nights ago as I was putting this topic together. So we'll be responding to that question as well. I'll be reading that. But we just want to start off by first focusing on the value proposition for credit cards and what we can accomplish financially as we expand our access to capital with credit cards and as a spending tool, of course, going forward into 2025. So what I have listed here is going to be personal credit building being a number one major use case for credit cards. The next is going to be cash flow management and budgeting. The next after that is going to be relationship banking, building quality relationships with quality financial institutions. Credit cards are one of the cornerstone products that you can use to do so. The next is going to be cash back rewards and additional income and the ability to basically kind of combat or battle inflation through that arbitrage, the ability to earn rewards points and cash back, travel hacking to basically offset the rising cost of goods and services. From that point, we're going to be looking at it as a foundation of business funding. If you're an entrepreneur or, someone with a lot of side hustles or an outright business, we're going to be talking about that as well. Legacy potential, one that doesn't get a ton of attention, or at least the perspective on it doesn't get a ton of attention. But my description is going to be the ability to build out great credit per card, per banking relationship, and transfer that over through authorized user joint accounts with loved ones. If you have kids, you have grandkids, if you're at that stage in life, spouse, siblings, parents, whatever the case may be, loved ones, potential business partners, using credit cards as the cornerstone to build good personal credit and great banking relationships, and then bringing other people you care about or plan to make money with into the fold. So that's going to be our positive list. What we're also going to cover and refer back to later on throughout this live stream is going to be the negative or misconception use cases for credit cards that have gotten too much traction in the last 5 to 7 years that at one point in time I was curious about, but after getting deeper into the space professionally and deeper into the space as an entrepreneur, I realized really isn't a safe and effective way to use credit cards that unfortunately is promoted all the time. And that's going to be using it as a long-term debt tool and using it to invest, which kind of jumps into the question that I was asked by one of my pioneers. So we're going to touch on that for a second. Hopefully we got some of y'all coming in soon, but I know that this is going to be replayed, so I wanted to get straight to it. So this will be coming from B. Maximus 3169. It's my guy. He's definitely made my thumbnails before for previous questions that were right on topic to what I planned on covering in the video. So he asked, what was, a good use case for using credit cards for investment strategies. So his comment was, I was thinking more of some of the type of investment strategies on credit cards. I've never hunted a quick buck or quicker buck before. You know of any solid strategies using the power of credit cards? Let's say you have 100K worth of credit card debt you can access or credit limits. What would you do with it, if anything? Would using the credit access just be too risky or dumb to use it on anything other than your monthly expenses and paying it off? If using all of the 100K is dumb, what about, let's say, only using 12K on some type of money making opportunity or asset? It was a really good question, and it was right on cue for the topic in this video. So to answer your question, my friend, hopefully you catch this live stream live, but hopefully if not, you'll at least catch the replay. To answer your question, generally speaking, there are exceptions. Generally speaking, I am an advocate, and it is plain and simple in the financial space that credit cards are spending tools primarily. And this is why they're not the best debt tool, intermediate to long term, the vast majority of the time. What ends up happening is a situation where 0% offers can make credit cards kind of sexy and, to be used as debt tools. And unfortunately, there's been a lot of media and a lot of, flat out business models that have been derived in the funding space and business credit space and stuff that have real estate space is another popular, arena for this, where, the idea of getting 0% credit cards and liquidating them or et cetera, to get into real estate, to get into these other business ventures, et cetera. Now, mind you, I want to be completely transparent. I have been leveraging credit cards for, cash flow needs and for, as a debt tool in my business when needed. But this is in the case of 30, 60, 90 day, 120 if it's a, 0% offer, usually half or a quarter of the 0% offer I have available. I'm using that capital to inject in my business. And it's also because the type of spending I'm going to be doing is, something that is rewarded very well on credit cards. So you think marketing and online purchases, et cetera, things around the business that are needed, equipment and software, et cetera. And so depending on how business is fluctuating, income is fluctuating, it may take me a few months to pay these things down. So I definitely exercise 0% credit cards in that capacity. But when we start talking about getting into something like real estate and some of these other like Turo, buying costs, some of these other different financial strategies that have gotten a lot of traction in the last 5 to 7 years of using credit cards, I plan on shooting an entirely separate video in the moderately near future around this entire topic of credit cards being used as and leveraged as long-term debt weapons to, for entrepreneurs to get into business, to get into real estate and various investment strategies. Generally speaking, it is not a good idea, especially if there's not a really defined financial plan, like a real investment or business plan on the table. It is not going to be the best idea to use credit cards for something like real estate that has so many different variables that can go wrong and not allow you to be able to get that capital back, or, to, especially if you don't have a backup plan on how you're going to get off or away from those credit cards. If you can't get that plan or that investment strategy or business strategy accomplished in a timely manner that you had mapped out, it's a lot of room for it to go wrong. And when you get stuck in a cycle of tens of thousands of dollars at 20+% compounding interest, it's a bad deal, very bad deal. The concept of using credit cards in that way it has become sexy because credit cards are so accessible by so many people, and the credit strategies and banking strategies to get access to these credit cards at a relatively high level are pretty attainable for most people if they put a little focus into it. And so it's led to a phenomenon where it's kind of like the poor man's lending product. This, in a sense of speaking, it's not to be like degrading towards anybody who's using it in that way, but at the end of the day, it's like I can't get my hands or qualify on any other quality financial tool. So my goal is to use this because it's so accessible, even though it's an inappropriate use case, but I'm going to use this instead because I can't really qualify for a legitimate line of credit or a legitimate installment loan or a legitimate real estate loan, etc. So that having been said, that criticism aside, is there a possibility to use credit cards effectively in some kind of investment or business strategy? Yes, as I just proposed, I'm using it actively and have for over a year and some change to cover, short term to slightly, intermediary terms of financial investments in my business. So if I'm kind of gambling to, make a bet to leapfrog in my business that's going to, help me magnify my efforts or help me outsource something that I need to outsource to make me more efficient. And this is something that, again, 30, 60, 90, 120 days, maybe even out to 150 days, give or take. If I have a 12-month or, or longer offer on a 0%, I'm giving myself 4, maybe out to 6 months tops, where I'm willing to take a little bit of a risk. If I have a really strong plan and I know if push really comes to shove, I can earn in some other capacity to compensate if this doesn't work out and get those credit cards paid down or managed really well. So if you're somebody with, thick skin, a real risk taker, and you want to go out there and take a dive, go for it. The concept is that usually it's not worth the risk. The effort it takes for you to work your way up to qualify for actual lines of credit, for actual term loans, actual real estate and business loans, these more efficient, well-designed financial tools that are designed for you to get into these other strategies is the ideal goal. Can you use it for something like, injection in your business for a short period of time? Absolutely. Can you use it for, side hustles? Think about, I remember watching another finance YouTuber that was talking about flipping luxury watches and stuff like that. I think that was Richard Fain, if any of you are familiar. He was talking about in the past how he would use credit cards, and that's something that you can do in a 30 to 45, 60-day window. So if you're familiar with that space, then that can make a lot of sense. Things of that nature where you have a real familiarity and you are knowledgeable, or it's a playground you're used to playing in, an arena you're used to playing in, and you know that you can accomplish a profit or get some money back on it or all the money back on it in 30, 60 days, 90 days maybe, then credit cards can work as a debt tool. They definitely can, especially at 0%, high enough limits for sure. But it's definitely overstated when it comes to real estate investing, when it comes to stuff like Turo, these other, hot, sexy investment and business models and investment strategies, pulling money off, liquidating credit cards, these backdoor hacks to liquidate credit cards as if banks don't catch on to these things. And you can end up in really bad consequences. You can lose great banking relationships, great access to great credit cards. You can even end up in scenarios where you're committing forms of fraud or some other type of activity that can get you into legal trouble. So I don't really get into much on those backdoor hacks on this channel. I don't really get too much into these borderline unethical or illegitimate financial strategies. It's just not my MO. Some people, again, I've watched other content creators and people in the finance space. I've watched them thoroughly in some cases, and I've seen them talk it. They make it sound sexy. They make it sound smooth. It may be working for them. I'm not saying it doesn't work at all. But to answer the question a little long-winded, if you can find a defined business model or investment strategy that you have experience in, that you can, the proof is in the pudding on, then yes, they can work in a short window of time with a good plan. If you also know that you can go out and work or get your hands on other capital that's more stable to pay that off, or again, go out there and work or generate income in some other way, if it doesn't work out and you can compensate with catching that falling knife when it's coming down, then cool. But the idea of like, hey, I don't really have a defined plan in place, but I have all of this excess credit on these cards. Is there something I can go out and do just arbitrarily? Is there some mythical, plan out there or investment strategy or business model that's going to work? If you have a legitimate business, legitimate skill set, legitimate value to add, and you need a 30, 60, 90 day, 120 day, maybe 6 month injection of capital, cool, go for it. If you know that money has a high likelihood of coming back, or that you're going to be able to stem the tide if it doesn't in a decent time frame. But I'm not somebody who advocates for like these fancy real estate investment strategies and Turo strategies, short-term Airbnb, short-term rental strategies, et cetera, et cetera, et cetera. Not a big fan in there when to answer that question for you, B Maximus. So comment down below if you happen to catch the live stream. Please jump in and leave your comment if you happen to catch it down below and on this. Hopefully you caught it. If you catch the replay, leave a comment there. Everybody that has tuned in so far, I see a few of you look like you have jumped in. Please comment down below, chat down below, comment on the actual video itself. This is going to get replayed and it's going to need the same support that the regular standard videos that come out need. So make sure you leave an actual comment, not only in the chat, but leave an actual comment on the video itself. So getting back to the topics that I had laid out on the use cases for credit cards, just if any of you are just not coming in, I'm going to quickly run through a recap on them. That's going to be using them to build great personal credit. It's going to be using them for cash flow management and budgeting needs. It's going to be using them to build great relationships with good financial institutions. It's going to be used to get cash back, rewards, travel hacking to create an additional income stream that's tax-free at the time of this live stream. And helps to battle the cost of the tax of inflation. Foundation of business funding if you're an entrepreneur, side hustler, or outright business owner. And legacy potential, basically meaning that you're building great credit, good credit history on your credit cards, and great banking relationships, and you're taking loved ones and people you plan to make money with that may need that boost and bringing them on to that success that you've built, that financial foundation. So that's something that doesn't get a lot of talk or a lot of merit, but I'm all about that legacy component in the financial planning on this channel and in my world. So that's another use case for credit cards. So if we look at the personal credit building component going into 2025, I want y'all to comment down below. I want y'all to get in the chats and let's talk about where everybody is with their personal credit building right now. Going into 2025, we're ending out 2024 roughly. I'm not trying to speed the clock up, but obviously it's the middle of the third quarter of 2024, and then we got about 4 months left. And you take out the holidays and anything else that's going on, we'll look up, it'll be 2025. So from a personal credit building perspective, where are we currently? And what is the goal with personal credit building in 2025? To give you an example for myself, I am at a position right now where my personal credit profile is pretty robust and pretty sturdy. What I'm looking to do is just kind of pad the stats on the personal side, which means take my existing cards and push those limits up as high as I can qualify to get them, to put me in the best position with new banking relationships, to look polished as possible, to give myself more breathing room on my credit report, and to give that better foundation into another one of these topics we're about to get into, which is the foundation of business funding. Again, another conversation for 2025. But my personal credit is in a great position, a lot of hard work, blood, sweat, and tears. Gotten that to, like I said, my FICO scores pretty consistently sits above 780 to 800 plus on the vast majority of the scores available. We have fluctuations because of various reasons. Everybody who's watching their personal credit knows how that goes. But in a very good place personally, I have well over 20 active trade lines on my credit report, and that's per bureau. So I am in a situation and I'm in a place right now where my personal credit is solid. I am just kind of padding the stats and maxing out my capabilities on the personal credit side to polish out for new banking relationships, expanding existing banking relationships, and really laying the foundation for more business funding activity going into 2025 to support my business ventures. That's my personal credit journey. So I want you guys to comment down below and let me know where you are and what that looks like for you going into 2025 in that example. The next one that we're going to get into is going to be the cash flow management and budgeting component. Now, this is an area that I plan on giving some more attention. So I'm focused on how can I tighten up my budget on a personal and business side, leveraging credit cards. And as I recently covered in a video, not necessarily trying to budget my way down to zero, but more of a scenario where I'm looking to just make sure that I have a broader control. And from a cash flow management and budgeting point of view also, but the credit card arbitrage rewards points component, I am not the best because I have so many other moving parts. I am not the best at making sure I'm using the right cards for the right purchases all the time. And that can help me budget more effectively. If I have a gas card, a grocery store card, et cetera, as some of those who optimize credit cards preach, that is something I could do better in 2025. I have enough credit cards now on the personal side. I plan on expanding on that probably before this year's out, where I'm going to give maybe 1 or 2 more personal credit cards. But I have a decent set of options right now that can help me break out my categories per card for spending. And that's going to help me budget better, because once I clean that up, I'll be able to reflect on my transactional history and statement on those cards and say, okay, this is my gas predominant card, grocery predominant card, other miscellaneous spending, travel card, etc., and be able to have a much easier assessment of my spending. And that's on the personal and business side. So that's the cash flow management and budgeting side. Cash flow management as well. If there's a shortfall on capital for whatever reasons, as far as income or revenue, then the ability to be able to step in with credit cards and effectively do so without damaging utilization or put ourselves in any kind of significant debt risk with, accruing a bunch of interest, anything on that at that nature. So that's kind of the cash flow management and budgeting side. Relationship banking. Many of you, if you do follow this channel, know this one of my favorites. This is where I do plan on expanding further. So this is where I'm not going to necessarily need the personal credit cards as much as one at a certain point in time, but I'm going to be attaining them to push the banking relationships that I'm establishing further. I have, in the region that I'm in, if you're on this channel already, you already know I am in Southeast Louisiana and pretty much outside the New Orleans metro area. I have a lot of quality institutions that are not in my state, and I'd have to go pretty far out to get to on a regular basis. So thankfully, we're in an era right now where you can bank virtually with a lot of these institutions, and that's what I've been maximizing. That has allowed me to get outside of the almost banking desert that Louisiana and the New Orleans metro area kind of has. We have a few decent, larger to mid-scale size institutions, but we really don't have a lot of them here yet. So I have planted seeds with the Bank of Americas that's not in Louisiana yet. PNC, not in Louisiana. I have my eyes on a few other financial institutions that I am building and planting seeds. And for me, with planting seeds, relationship banking is going to be focused on is building out deposit accounts. So think checking accounts, savings accounts. And for me, I use savings accounts because with the checking account, if I don't have like a direct deposit that I can send or consistent inflow transfers, then I prefer to just take capital and sit it in a financial institution in a savings account, ideally maybe a high yield savings, and add small transfers to it. This was my strategy with American Express way back in 2019, 2020, when I started with them. I started with a small high yield savings account, few $100, and just transferred consistently and hardly ever pulled out of it. And by 2023, along with some great work on my personal credit, I had offers available and capitalized, and that relationship has taken off ever since. So that's kind of the example on the relationship banking component. So that's an example of what I'm talking about for you guys. And I want you to comment down below, put in the chat. And I'm not sure if the chat function is working properly. I see a few of you guys on. You may be chatting, but for whatever reasons, I am not seeing it at the moment. So I'll just be keeping an eye out for that, but continue to chat anyway. I'll keep my eyes open. But anyway, that's going to be the relationship banking component. So for me, like I said, I've been planting seeds with institutions that are not in my region that have strong foundations that I believe are going to be sturdy going into 2025 and beyond, as the other economic changes we're going to talk about in a moment are coming along, but also that have products and services that are directly going to benefit my financial plan for my personal and small business finances. So examples of that, PNC, has decent business, personal and business credit cards, but they have good lines of credit options there available. Bank of America has a plethora of business and personal financial products as well. I'm really looking at business auto loans with them. That's one of my big ones with them that I'm focused on. They have some other products over there that I'm pretty interested in, but the one that I have my eye on the most is going to be branching into a business relationship with them and jumping into the opportunity to do auto financing with them or potentially Ally Bank. That's another one that, I plan on reestablishing a relationship with and checking out, that has a great business auto lending program. That's my goal. One of my goals for 2025 is to get a business vehicle. Probably even going to go as far as getting it wrapped in the business's logo, etc., for marketing and promotional purposes. But if at minimum a dedicated business vehicle versus what I'm in right now. I've been very conservative, riding in, believe it or not, a bit of a hoopty that has been paid off for some time, and intentionally doing so because the goal is to absolutely minimize, in my particular financial goal, minimize any personal debt. I am pro debt, pro leverage in the sense of, financial advancement, but I am at a stage where I'm focused on only having it on the business side, which is why I haven't done any personal auto loans. The only debt that I have in my personal name is going to be, mortgage related, any credit card balances that I occasionally keep here and there, and very tiny student loans. I have a small recreational loan where I bought my sport motorcycle through Navy Federal and experimented with them with that and paid the vast majority of that off. I have less than $10,000 in personal debt outside of mortgage debt on my personal credit. And that's very intentional. When I go out to get my next vehicle and actually do it in a financing type of manner, plan on getting a really nice vehicle, but it's going to be under my business. And Bank of America is one of those relationship setups that I plan on exercising and exploring that option with going forward. I went as far as when visiting in Dallas, Texas, and actually going to their basically their like downtown location in their building downtown to kind of connect with the banker there. And okay, starting to see some comments coming in. John Naranjo, if I'm saying your name, or Naranjo, if I'm saying your name wrong, forgive me, but I see your comment. I'm gonna jump in on that in a second. But just to wrap up the point on relationship banking, that's gonna be taking deposit accounts. Ideally, you can start with credit cards, but taking deposit accounts is the preferred method. Teasing and tantalizing that bank with checking or savings accounts for about 90 days or more, 60 to 90 days or more, and letting them gather data, get comfortable with you, etc., and then start to make offers to you. And, a lot of us that are legitimate in the personal finance space kind of see that as softball offers, basically a scenario where they're coming to you and you have a very good legitimate chance at qualifying for what they're offering for you or to you. And that's relationship banking at an overview. And it's just maximizing the resources that a financial institution has to offer by showing good personal banking and financial habits in their eyes and letting them come to you with more financial resources and opportunities. J Rad, hello, how you doing there, champion? So John, how do you fix the problem of having negative records in check systems? I have a friend who had Wells Fargo checking account closed after it was overdrawn for a long time. All right, John. So check systems, for anybody else watching that might be unfamiliar, is going to be basically a credit bureau equivalent for bank deposit relationships. John, to answer that question, check systems has a report just like a credit report, and there's a disputing capability online with them. You can order the banking report to the check system report to see what's on there, and there is a way to dispute. Now, I would be honest with you. Last I checked with check systems, and this is off the top of my head, there's a statute just like there is with consumer credit, meaning that negative items can be on for so long. I believe it's somewhere in the window of 2 to 4 years. I will say I can do some research on that and get back to you if you want to. Make sure you comment on the video, and I can screenshot and try to get back to you as well. And I can implore you to do some research with check systems as well. But they are reachable online. I believe they still have an 800 numbers available as well. But for sure online, you can pull a report and you can dispute with check systems. But, be mindful It may also make sense if that person is really being hindered by that negative check system's information for them to consider trying to settle on that and at least having Wells Fargo report that it's been cleared up, or taking the information that has been cleared up with Wells Fargo and you leveraging that against check systems to try to get it removed or at least polished up to look more positive. So that's just a general overview on navigating check systems, John. And let me know if you got any more questions or you need any more clarity on that in the chat down below. So yes, the relationship banking component is very important. I want you guys to leave in the chat your focus points on relationship banking next year. That's going to be one of the biggest components is accessing as many quality institutions for more financial resources. So going into 2025, we know that we have political shifts and we have economic shifts. We're going to have a new president one way or another in 2025 that's going to come in with different economic and tax policies and, government spending, et cetera, et cetera, et cetera. And we're going to come into 2025 with the Federal Reserve highly likely, cutting consistently on the Fed funds rate, which is going to have a total economic system overhaul on interest rates across the board for the most part, directly or indirectly. So we know for certain that we got economic and political changes coming in, access to financial resources, being close to banks, quality banks that are going to have the tools that are going to adjust with the economy. When interest rates are less attractive on deposit accounts and you need somewhere to earn on your deposits, that is a route we're going to want to go. When banks start loosening up their underwriting potentially and lending out more or lending at a higher capacity because interest rates are lower and money's more, borrowing is hotter at that point in time, banks are able to lend more, etc. When that cycle kicks in as interest rates are coming down, we want to leverage that. So definitely want to maximize relationship banking. Jumper, what are your opinions on the best relationship banks for potential mortgages? Great question. So really quickly, before I answer you really quickly, Jumper, let me respond to John again. Okay, thanks. What is the difference between check systems and early warning services? Great question, John. So really quickly, check systems is dedicated to previous banking data that has been reported by banks relationship-wise. So like you just gave the example of a friend who charged off a checking account with Wells Fargo and that data got reported. It's kind of a past behavior or past financial reputation. Early warning system is a little bit more algorithmic to try to take your data and give more of a future predictor of you being a risk. So of course the check system is providing, okay, this is what this person's done. Go do business with them at your own risk. That same type of data is being pulled in the EWS, but financial systems are taking that and running even broader data. So check systems is really honed in on banking data. EWS is looking at all kind of fraud indicators, banking data, credit data. It's looking at a lot of different data about you and background information that we know and probably don't know about to determine, your overall character and likelihood of being a legitimate client, a legitimate customer, or being a potential fraudster. So John, hopefully that answers the question between the two. Check systems is, to my knowledge, also not like our EWS in the sense that EWS is directly owned by a conglomerate of banks. It's literally been built and owned by a conglomerate of banks. I have to check in on check systems, but I do not think that's the case with check systems. I think that's a totally separate private entity that banks are just plugged into to get that data. But EWS is a little bit more algorithmic, live assessment of a person is fraudulent or risky to bank and lend to, versus check systems being a bit more of a past indicator of poor banking habits and financial habits in that way from banking relationships. Hopefully that answers your question, John. Jumper, great question. I love talking about the lending space with mortgages. When it comes to relationship banking and mortgages, this is where what I'm talking about is on cue. You want to set up good deposit relationships and show good personal finance habits. Branch out into credit card offers, because that's usually the next thing banks are going to offer you, and that's going to be the easiest and most useful financial tool that's going to advance your relationship with the bank and advance your personal credit. On top of that, when you start talking about potential mortgages, this is where it gets nuanced, Jumper, and you might have to give me a little bit more context. Are we talking primary residence? Are we talking investment property, second home? Are we talking 2 to 4 unit? Are we talking single family? It gets a little nuanced. Are you looking at buying in a rural area? Are you looking at buying in a city? Are we looking at a condo? It gets really nuanced, Jumper, when it comes to what relationships are the best relationship banks for potential mortgages. If you are hearing these questions, you can comment in the chat down below and let me know the type of property, where you potentially considering buying, and is it an investment property, primary mortgage? Is it a secondary property? Give me a little bit of those details and I can answer it more concise for you. But it's going to be nuanced bank to bank, because some banks are going to be great for primary mortgages and have little to no investment mortgage options as far as like rental property. There's going to be some banks that are going to have good second mortgage options, might not be the best primary bank. Some are going to do great with single family mortgages and be a little stiff when it comes to multifamilies. So there's a lot of nuances in there. And I do have an active mortgage license and MLS. I will put in the chat. 771386. So I just want to kind of provide that as I talk about mortgages. I have an active mortgage license that is kind of sitting on the back burner because I work for an institution right now where I'm under their federal banner. So it's like inactive in the sense of me participating on my own, but I have an active mortgage originator's license, as in up to date on a yearly basis, and I can jump out and broker independently at any given point in time. So Jumper, get a second. Let me know some of that information down in the chat down below. So anyway, while I wait on some of you guys to continue to comment in, and I salute every single one of you taking your time out on this Friday evening to get advanced on your personal finances. So for those of you who came a little bit later on, we're talking about relationship banking and credit card strategies going into 2025. And I read off my best use case list for credit cards. So building personal credit in 2025, cash flow management and budgeting in 2025, relationship banking, cashback rewards and travel hacking in 2025, the foundation of business funding going into 2025, and legacy potential, your ability to build great credit history with great cards and great financial institutions, and passing that on through authorized user or joint accounts with loved ones and people you plan on making money with. That is my list of use cases, my big 6 on use cases, best use cases for credit cards going into 2025. And I want each of you to jump in on this, on each one of those topics, on where you are and what your plans are for 2025. I also responded to a comment on negative use case scenarios. So that is trying to use credit cards for long-term debt tools and trying to use them for investments, like investment capital. And so like examples of that is trying to use credit cards to get into real estate, trying to use credit cards to get into Turo. That's sticky business, very sticky business. And I can comment on that again. I did at the beginning of the video, but I can comment on that again if you want some more clarity, if you just came in late. So that's just catching a few of you up, since I see a few more of you have joined in. John, does late payment of taxes or not paying tax on a particular year show up in a banking screening system? Does the IRS share this information with banks? Great question, John. This is going to fall in our relationship banking category to stay on topic. This is going to show up if it shows up on your personal credit report. Yes, the IRS and the bank definitely are sharing information, but it's not the type of situation where the bank is going to the IRS when you apply for the account and saying, hey, does this guy owe you taxes? What ends up happening a lot of times is you may be asked when you're applying for that account and you're doing your signature card or whatever the case may be, signing your documentation, are you subject to some kind of backup withholdings or owe taxes or to the IRS? You may be asked. But if the IRS doesn't come in and put it on your credit report or go to that bank and put a lien on your bank accounts, it's not necessarily something from my 13 plus years in the banking industry that I've seen arbitrarily where it's like, oh, I owe back taxes, and it's getting reported live to the bank, and it's like distorting my ability to do banking relationships. It doesn't really work that way. It's not a check systems type of thing. Credit report is the credit report, or if the IRS directly comes in and like puts a lien on your assets in the bank. So that's how that one is going to work. Let me know if you have more questions, John. Jumper, that's interesting. Personally, not sure yet, but will be a primary residence. I would assume best practice is just to try to have or gain many banking relationships to see the best offer this one instance. Yes, Jumper, that's the general answer. To give you some hypotheticals so I don't overwhelm you with the questions that I asked, you already said it's a primary residence. I'm going to just assume single family. The next thing you're going to want to sort out is you want to go into these banking relationships in advance. Shop these banks before you try to bank with them. I do it every time. That is relationship banking at its finest. That is mastery, where you go in and say, what financial goals do I have? Like getting a mortgage in a primary residence. Jumper, where do you live, by the way? Comment that down below and let me know what city or state you're in. That might help me answer a little bit too. But think about what goals you have. In your case, to fine-tune this example, I have a desire to get a primary mortgage soon, or primary residence soon. I'm gonna assume a single family. If you're not in a certain handful of cities, multifamilies aren't that common. I'm in New Orleans, Louisiana, so 2 to 4 units are very common here, but I know it's not around the country. So assuming you get a single family, the next thing you're going to want to do, mortgage rates are going to be pretty competitive, Jumper, pretty much around the board. What banks are going to defer is going to be the products that they offer. All right, Jumper, you said NYC, Metro, New York, New Jersey, etc., up the East Coast. Shout out to that whole region over there. That's somewhere I plan on traveling relatively soon. So in your case, Jumper, I want you to think about where you stand first. And what I mean by that is, are you a veteran? Are you likely to buy in a rural area that will qualify for USDA lending, which is going to be 0% down, great rates, and the propensity to get seller credits and other benefits of that mortgage if you're going to buy in a more rural area? Because USDA is not offered by every mortgage lender, every bank. So you want to find a bank that has that if you're looking to do a little outskirt, okay? Because USDA qualifies for like 80 to 90% of the available real estate because it hasn't been updated in a couple decades. So what's considered rural has been built out on over the last few decades and has not been caught up by the USDA. So you might be buying somewhere that qualifies for the USDA and you can put down and get great rates, 0% down, and other great terms on that loan. You want to find a bank that might offer that. Another thing, if you're military or good, most banks offer VA loans, but that's another one to keep in mind. What's your strategy with your down payment, Jumper? So are you looking to go FHA? Are you looking to go conventional? Do you qualify for either one? Because banks are going to diversify on what they offer on conventional. Some banks are going to require more down. Other banks are going to have different incentives. They're going to have grant programs available for home buyers, closing cost assistance. So to answer your question a little bit more detailed, what you want to do is build a profile for yourself and say, okay, I am looking to buy somewhere that might qualify for USDA. I have good credit and a stable job and good income, but I don't have a lot of cash to put down. So I need somewhere with down payment and low closing cost requirements. I might need down payment assistance. I might need grant assistance. So looking for a bank that's running a grant program in the area I'm looking to buy. And what that means is they'll run programs to try to repopulate or diversify residential areas. So they might be $2,500, $5,000, $7,500 on the table to buy in a certain area that you might be interested in that can go towards closing costs, buying down your interest rate, or down payment assistance. So you want to create a box parameter of, like, okay, this is me going into purchasing my home. And now I can go and say, I'm looking for a bank that offers these few loan products, some kind of down payment or closing cost assistance, etc. Basically, that's some of the things that I mentioned is going to offer things that fit your box the best. You're gonna want multiple banks. I am literally in the mortgage lending and banking space. I don't recommend anything less than 3 banks to shop with. And I look at it and say, Jumper, think 1 to 2 brick and mortar relationships, and then maybe 1 or 2 online lenders. If you want to go that route, they're cool. And then maybe like 1 mortgage broker, 1 really good mortgage broker, to give an example. So you want to set up relationship banking because that's your opportunity to connect with banks and sit down and talk to them about your ambitions in the next year, 2 years, 3 years to buy. What can they offer? That's going to help you narrow down what you might qualify for, what's not going to work for you. etc. So use relationship banking and use like good deposit account history and getting good quality credit cards with these institutions. When you have those data points, the banks and the bankers treat you a lot better, and they're going to be willing to give you more information. John said, thanks for answering my questions. Good to go. Yes, sir. Of course. Jumper, thanks for the informative info. Once you put your own profile together, I would guess try to contact a relationship manager, banker, question what they offer. What am I trying to do? Yeah, Jumper. So if you don't have a ton of experience around the buying process or getting your first mortgage, I know I'm putting out a kind of a long-winded response. What you want to do is sit down with these financial institutions, as you just said in the comment section or in the chat rather, and you want to sit down with them and let them know that you're looking to buy, and then give them the time window and let them kind of, if they're professional and do a good job, not all are, just like any profession, they're not all created equal. So definitely do a litmus test. If the energy's not there, if they're not really inquisitive, if they're not informative, like I'm trying to be with you, engaging, this is just a live stream. It's not like you're coming to walk into my financial institution I work at and get along with me, and you see how I'm still responding to you. So you want somebody engaging, responsive, and knowledgeable to help you discover that buy box and help you to narrow down what you might qualify for based on your work history, your credit report, how much cash you have, the home you want to buy, the neighborhood you want to live in, your plans for the home in the long term, all of those different things to help you define the loan terms. Do you need a 15-year or a 30-year? Do you need FHA or conventional? The list goes on. So yes, sir, build strong banking relationships. When they look in and they pull up your profile and have that conversation with you, Jumper, you got a good deposit relationship with them. You got signs that you may have good credit. They're going to take you more seriously because they're going to really look at you as a legitimate potential future homeowner or buyer, or like a potential borrower. When you walk in and you don't have anything with them, they may treat you a certain way to try to get the relationship, but that's their skepticism in the back of their mind, or if you're even serious or qualified, because there's no data points for them to pull up and look at. So make sure that you leverage relationship banking, as you said in the beginning of your chat, to help get that box put together, which I don't mind helping you as well. If you want to connect outside of this, comment on the actual video itself down below with your information. I do check the comments in the chat. I'm always here to help all of my pioneers and my viewers out as much as possible. I will help you put that box together so you can walk into the banks more confidently. But to answer your question, yes, sir, that is correct. Of course, Jumper, no problem, man. Again, if you want to get some deeper insight from me, I don't mind giving you a little bit of more info outside of this live stream. You can comment down below in the actual video, which everybody should be doing anyway to support the video for its replay after the fact. But comment down below if you let me know if you're looking for more on that, Jumper. Outside of that, I can help you a little bit more with that box, putting that box together, that buy box. All right, so the economic factors that are at play that are going to affect our use case for relationship banking and credit cards. So let's talk a little bit about that, and you guys feel free to comment on this. Think about the political climate. Think about the economic climate, the Federal Reserve's interest rate changing, the effects of the election on the stock market and the overall economic system as a whole, and how that's going to ripple out through banks and their peace of mind and their business model and their appetite to lend. This is all very important. The geopolitical situations we have going on with wars around the world that are, believe it or not, directly affecting our economy. Wars are happening in regions where it's, the situation in Israel, Palestine, Houthi rebels, they're literally in one of the water passages that what some of the greatest trade in the world is done in, and that's being jammed up, and that's all coming home to roost, affecting energy, affecting our energy independence or dependency. That's all rippling through the banking system, rippling through their appetite to lend, their uncertainty, the Federal Reserve's economic policies and how that's going to play out with inflation. How many of you feel confident that inflation is tamed enough to be cutting interest rates, and how that's going to affect the banking system? When you start to talk about all of these different factors, the fact that we're going to have a new president one way or another who's going to come in with their own agenda on the economic system as a whole with different approaches. Everybody wants to talk about housing affordability. Jumper's talking about purchasing a home now. What is the effect of the presidential campaign on each side's policies on trying to make housing more affordable. While rates are coming down, by the way, because again, there's these crash videos out there on real estate that really floor me. I'm trying to figure out the base case for a real estate crash in the next couple of few years. And comment down below if you're somebody who believes that's a thing. I would love to have that conversation. With interest rates coming down and a serious strain on housing supply, how is that going to play out with getting into real estate? How is that going to play out in our overall economic system? Commercial real estate affecting mid to small size banks. That's the largest lender for commercial real estate. Higher interest rates and work from home has really damaged and took a chunk out of commercial real estate. We don't have to get into the weeds on that stuff, but all of that affects our relationship banking, and all of that affects our access to capital, getting qualified for credit cards and other lending tools. So let's get some feedback on thoughts, questions, and concerns around that, because that is very relevant. If you are in cash, interest rates are coming down. I just shot a video about that. You no longer can hide and hide your savings accounts and CDs in the next X amount of months or year or so. That's something that's important to know, because now you have to take a little bit more financial risk to get financial progress on your cash, because if not, you're going to lose even further on inflation. So if you have cash in the bank right now, what institution are you banking with, and what financial plan do you have to move your cash around and continue to try to get the best earnings possible? Are you locking in longer term CDs at the best rates you can get? Are you ready to get into the stock market or some other venture with your cash to make sure that money is growing, to keep up with the fact that inflation in assets is about to kick up, most likely with interest rates coming down? So comment down below and let me know where you sit with your financial institutions, your cash positions, and your personal credit ambitions, your borrowing plans next year. How many of you that are still on are entrepreneurs or outright business owners or plan to get into business in 2025? Drop that in the chat down below. Let's talk about how that's going to be affected going into next year, and how relationship banking and access to great credit cards can set the foundation. As many of you may know, and some of you may not, the relationship banking and personal credit are the major pillars to business funding. And I'm not talking about trade business funding, as in net 30 account with Quill, Uline, Granger. I'm talking about actual cash access, business credit cards, lines of credit, loans. These are going to be financial products on the business side that, unless you have an established years old business with 5, 10, 15, 20 plus million in revenue on a regular basis, X amount of employees, etc., you're going to be personally guaranteeing that debt. So that means personal relationship banking, personal finances, and personal credit is going to be huge in any entrepreneurial or business funding needs going into 2025. Will banks be more eager to lend because rates are down? Are they going to still be stringent on underwriting, but maybe give out higher limits, bigger bags, if you will? Or is it going to be a scenario where banks are going to continue to stay tight as they've done in the last year or so, tighter than usual, as technology advances in underwriting and automation in underwriting? Is that going to make it harder for more people to qualify? I have a video coming out very soon talking about how FICO has rolled out a product in the last few years that's just starting to catch steam now. That's going to be a big deal going into the next few years, and banks and lenders are going to be looking for it. So this is going to be another very valuable insight on going into your financial plans in 2025. If you plan on borrowing to leverage for financial advancement, you're going to be gauged differently as technology keeps advancing, as these credit scoring models get more efficient and effective, as they get more in the weeds on gauging us as high or low risk potential borrowers. You need to position yourself effectively. So getting your personal credit together and stacking great personal credit banking relationships and great personal credit cards that can help you build those data points are going to be essential going into 2025, because the lending environment may still be rough. Interest rate cuts by the Federal Reserve and interest rate hikes, just like when they come, there's a lag from interest rate movement by the Federal Reserve. What that basically means is that when the Federal Reserve cuts, it could take months, many months, for us to feel the effects of those cuts. So we are going to still feel the impact of the rate hikes through the end of 2024, through good portions of 2025, before the cuts that may be coming this next month in September and beyond can come into play. So 2025 can continue to be a year of previous economic policies. That's going to be in the interest rate environment we're in, banks maybe being a little bit more leery and being tighter, underwriting being more stringent. It's going to be important that you don't think that, oh, rates are cut, more money's flowing in the system, banks are just going to start handing out bags left and right. It's not necessarily the case. It can take months for this to kick into the economic system and filter down to the basic underwriting we're going to encounter when we apply for credit cards and loans. So going into 2025, finishing this year strong with building out your banking relationships, making sure your job and income is stable, everybody. Like, that is something not talked about enough by anybody in the personal finance space. Most people are not taking the time to encourage you. If you have a job, please keep it. If you don't have a defined other form of revenue that can replace it, keep your job and keep a stable income coming in. That is essential to your financial health, essential to your credit card journey, essential to your personal credit journey, and essential to your business funding journey. Your personal income. Keep a good, stable job. Keep in the same industry as long as you can. Keep with the same company as long as you can. I know that we're in an environment where job hopping, protesting jobs, side hustling, gig working is hot. All of that is cool. But none of that has really been factored into the banking system in a way that is going to allow you to keep banking and borrowing effectively. It's not. Really effective and really structured gig work can work. And if any of you do gig work, comment down below. We can have that conversation and throw that into this mix, because that's a whole nother part of, a whole nother financial plan, in a sense of speaking, on how to make sure you still use your gig work, whether full-time or part-time, to increase your banking relationships and to leverage your access to personal credit cards and build out your personal credit. So, but stay in the same field and build a strong job history. Build a strong foundation with consistent income. Jumper, you were talking about getting into a primary residence. I'm not sure if you knew, but most loans, with a few exceptions of some other, bank statement loans, etc., general, conventional, FHA, government-backed loans, 2 years of job history is necessary. Same industry, consistent pay. If you're not on a W-2, if you're on any kind of 1099 or any other form of income, you have to, a Schedule K from a business, whatever, 1040 on a tax return. You have to have that income for 2 years to qualify for a mortgage. W-2 you can have for X amount of months, because they consider that a stable form of income. You can have that for 30 to 60 days and qualify for a home. But it's a different beast when you don't have a W-2. Keep your job. Stay stable with your jobs going into 2025. If I had to give you any basic level of advice that seems to have gotten lost in the sauce on the internet lately, with all these different investment and business models, please keep a stable job and income until your other financial ventures, investment, entrepreneurial ventures really take off and can sustain you. Keep your income, keep your job. It matters a lot in the banking system. It matters a lot with your personal credit. It matters a lot funding your business. I still have a corporate job, even though I have an active business in play that's actively in motion. I still have a corporate job that I don't have any plans on leaving anytime soon in the next few years. I don't. The income the revenue I'm expecting to pull in from my business that I'm going to set to give me the confidence to leave my corporate career full time and jump into my business is high. It is high. It's like literally double or nearly triple, 2 to 3x my income from my corporate career. And it's a pretty high bar, because I have a pretty good income. I have good benefits, so I am setting the bar to not only replace my income, my additional compensation through incentive packages and bonuses and commissions, but also my health benefits and the other ancillary benefits that my job is offering me, that they're paying for or compensating or put extra money towards. They cover insurances, disabilities, short-term disabilities that I don't have to pay for. All of that needs to be covered by my business revenue, my ability to pay myself through my business. And I am not there yet. So I'm telling each one of you who's sticking through this live stream, and we're talking about relationship banking, talking about building our credit, talking about maximizing our personal finances going into 2025 around these specific topics. Keep a stable income, stable job history. It is essential. So another one that we need to talk about before we start to wind down on this live stream, foundation to business funding is what we already kind of were tipping into that one on some of these previous topics. As I mentioned already, when it comes to business funding, not trade credit, not business trade credit, Quill, Uline, Granger, Net 30, Net 60, that kind of stuff can be built totally separately, separate from your personal finances. If you're in a business where you are doing business to business, Net 30, trading, etc., that's another beast. We're talking about cash available debt tools like lines of credit, business credit cards, business term loan, business auto financing, business real estate, business commercial real estate loans and lines. This requires good personal credit, good personal job history, good personal finances. It will matter. I don't care what you think you have going on. I don't care who you listen to on the internet. I work in the banking industry doing this, not as like a teller, not as back office customer service. I'm literally like the person you're going to come to for your business account, business lending, your retirement needs, your personal lending, your mortgage. I am that person. So I am telling you that you have to keep strong personal financials, keep strong personal income, keep strong personal credit in order to qualify for business funding on a cash level. So that's going to be, if your plan in 2025 is to build out a strong platform for business funding, to get access to business funding in 2025, I assure you, you're going to need good personal financials, good stable income, and a good job history. Okay. The next one is going to be the legacy component. That'll be the last one that we touch on for the most part. And we'll just throw out some random ones. I'll give anybody else a chance to answer any questions. Drop it in the chat. But when you start talking about legacy, this is one that we don't talk enough about. This is your opportunity for the hard work you've done on your personal credit. This is the opportunity you've done with building out these personal banking relationships. This is the opportunity where you've built out a robust credit profile and you have access to other financial resources and tools for you to pull somebody or somebody's along on the journey when it comes to gifting them with a boost in their personal credit, bringing them in on the fold of a great banking relationship. And an example of that is like I have my kids set up with Navy Federal. They have savings accounts at Navy Federal as well as a couple other institutions, but I'm talking about those institutions that you normally can't get into unless it's some kind of special entry. So think about getting your kids, your loved ones into these quality institutions that you were able to get into legitimately and ethically that they may not normally be able to get into by themselves. My father is a military veteran, a Vietnam veteran, and we were able to get him in to establish that relationship. I established it, and I immediately brought my kids in, my other family. Like I brought people in on that could qualify to get in. And now, barring nothing crazy happening, they're going to be able to benefit from the great value that Navy Federal has to offer and all the financial resources. I have a teenage daughter, believe it or not. And I know many of you may be looking at this live stream who may still be on it, looking at me like I'm not too far from a teenager from what many people say. But I do have a teenage daughter. I am putting her on my accounts or adding her to my banking relationship, and I'm about to add her to my personal credit cards so she can start to take on some of that personal credit and have her name in the system in that way with these banks and financial institutions. So as she gets to her needs, her own personal financial needs, as she gets older, she's going to be in position. And I'm going to do the same thing with my young son, going to be setting them up. This is the kind of thing I'm talking about. Some of you have parents who are still participating in the economy that can use this benefit, siblings, other loved ones, spouses, mates. This is your opportunity to take your hard work and be a gift to somebody else. There's not enough conversation around legacy. This is living legacy, your opportunity to pass along great credit and save somebody else years of building and put them ahead by years by getting them in the door with great financial institutions in a good way, with their name good on great accounts that have great deposits and great personal finance behaviors, great credit, great credit cards that have great credit usage. So legacy is important when we're talking about 2025, building our great relationships with banks and building our personal credit and getting our access to more personal credit cards. Legacy is essential. You want to be a gift to your family, to your loved ones, and honestly branch out to your community. There's people you can help. You can take your acumen, you can take your effort, and you can gift it to people who you feel deserve it or can use it. And this is a mild form of, philanthropic, in a sense. It's direct philanthropic engagement, community engagement, your ability to give back. So legacy is important. When you're building out your plan for 2025, and we're going to do some more meetings and live streams on 2025. We're just kind of giving a light overview on personal finance, personal credit building, et cetera, et cetera. But when you're building out your personal financial plan, I implore each of you to find, if you already don't have it, and comment down below in the chat if you do have, people that you're offering this gift to already. But have that plan have that as a part of your plan going into 2025. Once I get these banking relationships established, once I get these personal credit cards stacked up, once I get these great personal credit data points built up, how can I gift this to other people around me who can benefit from it, that will actually value it, by the way? I am not telling you to waste your time and energy on people who are not going to value what you're giving them. But people who you know that you're investing in, that value you and respect you and are going to appreciate what you're providing, how do you give that gift to somebody else and give them that peace of mind or create that stability or advancement for them? So I want you to comment down below or put in the chat, do you already have this going on? If not, how do you plan on providing this for your loved ones or potential business partners, family members, mate, kids, etc.? Comment that portion or chat it down below. Just as a quick reminder, like and comment on this actual video as if it's a regular video. It is a live stream, but those of you who are in, I am reminding you to comment so we can continue to get this pushed out through replay after it goes live. So please comment on this video, like, share it. There's a lot of valuable information and some good questions that got asked in this. Not the largest group in the world, but it is an intimate, engaging group. Great information in here. I'm giving this information as if there's 5,000, 10,000, 20,000 of you in the room. So I wanted to implore you, push this out. I want any of you that might be remaining before we wrap this up, if you are still actively watching and you have any questions or thoughts, chat them now down below. I'm going to give a few minutes for some more questions. Any more comments or thoughts before we wrap this up and close it out? We're going an hour, almost an hour and 10 minutes strong again. So I'm giving the room for last questions, thoughts, personal credit building, relationship banking, business funding, business building, any of these types of topics that you may have questions on. For the remaining group of you who are left, comment down below and let me know what questions you have in the chat. I don't have any activities since Jumper and I engaged. John and Jumper and I engaged a little bit. So anybody that's still tuned in, personal credit cards, getting qualified for credit cards, personal finance, banking relationships, business funding, business banking relationships. You have questions. This is your opportunity to ask somebody who has 13 plus years of experience in this arena, who is live and can jump into some of these questions right now. Comment down below. I'm going to give y'all a couple more minutes before we wrap this one up. Let me know any thoughts. Let me know any additional questions. While I'm wrapping this up, I want to tell everybody I appreciate them. Wayne, my guy, I see you. I appreciate you coming at all, my friend. I appreciate you taking the time out to come tap in. Hopefully you caught a good portion of it. If you want to chat down below and let me know if you want me to recap anything, I don't mind taking a few extra minutes for you and recapping anything we talked about, the strategy for 2025 and questions to get you guys to think about your goals for 2025 around personal credit cards, building our banking relationships, building our personal credit, cash back and rewards, cash flow management, budgeting, travel hacking around these cards. You know, I had one of my guys comment about, you know, even relationship banking for mortgage lending. So Wayne, if you got any thoughts or questions, you know, if you're still in, just give me something in the chat. Let me know if you want me to catch up on anything. Anybody else that's sitting in the backfield? Kent, question: Is trade lines safe? Kent, when you say trade lines, generally speaking in the finance world, that is considered any trade line that is reported or credit account reported on your credit report. So are you asking about purchasing trade lines like authorized users or supposed primary trade lines that are offered out there and bolting them onto your credit report, Kent? Is that what you're asking? Meaning like companies that will pay you to add them to your credit card. Yes. So one last clarification. Are you saying having yourself added on to credit cards to be an authorized user to boost your credit report, or you have credit cards that you want to put out there to rent to potential people who want to be added on for that credit history? Are you the one that providing the credit cards? Or are you the one trying to get your credit boosted and jumping on trade lines? This is my last question before I answer back, because I do know what you're talking about. I just want to make sure I'm on the right end of this. Make sure y'all are commenting on the actual video. Step out or, you know, drop down and comment on the actual video itself and please continue to support. I'm putting a lot of time and value in this, and then this is your opportunity to basically put it back into this channel. I have great credit, 802. I was thinking about being the one to sell side. Gotcha. That's what I wanted to know. Okay, Kent. So great question. There are legitimate companies. Trade line supply is one that immediately comes to mind. There are a couple others that are legitimate. The concern or risk for you when you say, are they safe? As you are the one you're selling those slots on your credit cards. Banks have become very aggressive about this, and that includes credit unions and banks, Navy Federals, Capital Ones, Chase, etc. First off, you want to even make sure, or, you know, maybe that platform that you jump on will do the due diligence and making sure that the credit cards you have are banks that actually even report that data over, the authorized using data over. But more importantly for you, from a safety perspective, banks are very aggressive. I just, for an example, made an authorized user change within the family for myself where I took someone off and added somebody else on. When I took them off, I believe it was Capital One or Navy Federal, made it clear that I can't add that person back on. Just as an example, in order to make money with that strategy, Kent, it's a great strategy, could be a great side hustle, but you usually have to add multiple strangers on to your personal credit card as an authorized user. The financial institution, especially the ones that have the technology, like a Chase, Capital One, could be digging into this and trying to look for a correlation. They'll be looking for patterns of the fact that you might be selling these spaces, because a lot of times in order to make this money, you have to bring them on for 2 to 3 months and then kick them off and get a few more people on and keep going through this game. Banks are privy. I am telling you now, they are very privy to this. You could be risking violating a policy of inappropriate usage that you may have signed unconsciously in terms and conditions, and can get your credit card shut down. If pushed all the way out, can get your entire relationship shut down with that bank. I'm not saying it's guaranteed to go down that way, but it is a possibility. You're asking if they're safe. They're risky. It works. It exists. People have made, and some people are now probably making good money doing it. But usually you have to rotate people on and off in decent numbers, 3, 5, 7, 10 people at a time. You have to rotate them in and out every 2, 3, 6 months at a time in order to get fresh people on the rent, because they're not paying every month for it. Most of the time they're paying one upfront fee, and then you have to give them a certain amount of time and then get them off and get somebody else to pay. So in order for that to work and really make money from it, you could be risking violating terms and conditions on the credit card terms and conditions the policies, and you could risk that credit card getting shut down and possibly that whole banking relationship getting shut down. So hopefully that answers your question. Comment down below and let me know if that answers your question, or if you have any additional questions around that topic. That is my knowledge base on that topic, though. While I wait on Kent's response, anybody else that's in the chat that's just coming in or has been sitting in the background, to me, it does not sound like the risk is not worth the reward. Added a family member for 6 months to 3 of the top credit cards. His credit shot up by 100 points. For sure, Ken. I mean, as I stated, I'm not saying it doesn't work. And again, you said it's a family member. That's a different beast. You might be able to kind of demonstrate some correlation there. It's not that banks pick up on this every time. I'm just telling you the worst case possibility. It is a lucrative strategy, and it is very simple and relatively passive. So I'm not mad at it. Your first question was, is it safe? It's risky, but is it worth the reward? I mean, if you do it at scale, you can make hundreds of thousands of dollars a month off of your hard-built, hard-earned credit card and credit history. So, and it can be very effective for somebody else. It could definitely be the gift that keeps on giving when it comes to bolstering their credit profile. So absolutely, Kent, it could definitely be worth it. I am not knocking that. I'm just answering the question as you asked it. Is it risky? Yeah. Is it safe? Not quite. Is it something that you're guaranteed to get caught up in a negative way? Not necessarily, but it is possible. Just do your homework. Be mindful. Watch the velocity of doing this. Watch how often and free. That's really the trigger point. If you're doing constant changes very frequently. You answered my question well. I appreciate your help. Of course, Kent. Of course. Thank you for asking. Thank you for taking some time to be on the live and joining and getting in on this knowledge and joining the conversation. Anybody else sitting in the backfield that has not spoken or has any additional questions, thoughts that are in the arena of personal credit, banking relationship building, credit card approvals? What was your answer to John's IRS sharing info with the banks question? Great, Wayne, definitely. So my response to John was, I work in the banking industry, and I'm sorry, Wayne, 1 second. Kent, the time and days of the live streams occur currently. They are scheduling Fridays, usually about 7 to 7:30 p.m. Central Time Zone. Again, they're usually on Fridays, 7 to 7:30 p.m. on a Central Time Zone, Kent. So depending on where you are, you want to adjust your time zone to that. But at the moment, that is the schedule that is best for me. These live streams are intended to engage directly with you as my audience and do what we're doing now and give you that live, raw attention. So previously, I did Pioneer Spotlights where I took questions out of the comment section and just pre-recorded videos. I'm taking the time out to actually engage live. And right now, I'm planning on doing that every Friday, available at about 7 to 7:30 Central Time. Wayne, the response to John's IRS sharing info with banks was, I work in the banking industry. I've been in over 13 plus years. I've worked for a couple different institutions, one really large one really small local one. There's been no indication I've seen where there's this direct connection when like a background check is done with the IRS when you're applying for an account or a credit card. And if you owe the IRS, you can't get a bank account. That has not been any experience I've had directly or with any colleagues or I heard of anywhere in the industry. The experience that I have seen is that you may be asked when doing your disclosures and signature cards, when doing new bank accounts, you may be asked by some institutions if you owe the IRS any backup withholdings or back taxes, and you have to disclose that. So then the bank may connect with the IRS or at least be prepared for the IRS. The only other way that I've seen that this can come back on you, Wayne, with the IRS is going to be if they report it on your credit report and put some kind of lien or like reporting there that you owe or delinquent, or if they go to the bank directly and put a lien on your assets and the bank is forced to freeze your accounts. That I've seen firsthand. Sheriffs come in with the documentation and go straight to the branch manager or the banking institution and put liens on your account. That is the most direct connection I've seen with the IRS and the banks. And of course, any reporting on cash flow and transaction volumes. But when it comes to banking relationships, qualifying for checking accounts and savings accounts and qualifying for credit cards and things like that. The IRS is not one of those like background checks or equivalent to like a credit check where like if you owe the IRS, you're just automatically kicked out of the bank. They're not associated in that capacity. Only if you have to disclose it or if the IRS goes out of their way to report it to that financial institution. So hopefully that answers your question, Wayne. Let me know if that, clarifies that one for you. That's what I explained to John earlier in the live stream. So let me know if that's good for you, Wayne. Kent, let me know if you have any additional questions as well. I still see we got a good few of you still in here. If you're sitting in the background, you have not asked any questions yet. Personal banking, personal credit, personal finance. Of course, Wayne, anytime, my guy, anytime. And thank you as always for tuning in. Anybody else sitting in the backfield, personal banking, relationship building, business banking, relationship building, personal credit, business funding, personal credit card strategies. These are all mortgage lending. These are all within my wheelhouse. If you would like to ask any final questions, we're going into an hour and 20 on this live stream, which I'd love to spend the time with y'all, but I will be wrapping this up relatively soon. So I want to give anybody else who's been in the background or just joining additional questions. What's your opinion? Kent asked another good question. What is your opinion on HELOCs as a primary mortgage? So very good one, Kent, because this one is not one that many people know a lot about. So it's a great question. I think that it can be an attractive option under certain circumstances. If you have a defined financial plan on what that capital the HELOC is going to provide you is for, then I think it can be, and that means like going out and buying a rental property, starting a business that you know is going to have a good chance of doing well and bringing in revenue, getting you into some kind of financial advancement that you normally would not have gotten capital to get into. That it can make it attractive. Another plus at the moment, at the time of this live stream, that I think makes a HELOC as a primary or even as a secondary lien attractive right now, Kent, is the fact that interest rates are on the trajectory to go downward for the next 3 years based on the Federal Reserve's economic projections. They are projecting to cut interest rates between this year, the end of this year, 2024, all the way through 2027. So HELOCs are variable interest rate debt instruments. So it is very important to be getting them at the right time. So right now, Kent, I think a HELOC as a primary mortgage, if it's a type of property for whatever reasons where you're buying with enough equity or however that's working out, because of the current economic climate, where I do believe buying more real estate can be advantageous if strategically done, because I believe residential real estate is going to go upward, not downward in the next couple of years or so, or any other financial plan that you might have around business or entrepreneurial investments that you know can return back some great revenues. And the fact that interest rates are on the verge of going down in the future, not up. They're a variable rate product, and that's what could make them risky. But to answer your question, I think it's great you even know that exists as a primary mortgage option. And yes, I am aware of it. I do think it can be an attractive product if you have a plan, if you have somewhere for that capital to go and deploy. Otherwise, it may not be the best option because it's not going to be as stable, and it could over time become more expensive than a regular fixed mortgage could be. So it has its pros and cons, but it's a great financial strategy, or at least debt tool rather, for a good financial strategy. So great question, Kent. Let me know if that answers your question. I've heard a lot of the velocity banking and using HELOCs to bring down balance based off of principal payment. Yes. So that is a strategy that can work really well. HELOCs are one of the more popular tools because of the rinse and repeat factor. Do your homework on that if you see it as something necessary. I have studied it pretty extensively at one point in time. I haven't looked at it in a recent year or two, but at one point I was a big student of it because I thought it was a fascinating strategy. And to be honest with you, I like the strategy a little bit better with insurance products, but I have not even really got into insurance on this channel. I do have an active life insurance license. If you've heard of like the infinite banking concept, being your own bank concept, that is something I have a lot of knowledge and experience on. That's kind of where I like to use the kind of velocity banking and being your own bank concept, Kent. HELOCs can work well for that. Again, depending on the situation. Are you paying off really rough debt, like bad credit card debt or something of that nature? Or, any other debt, or like you're maybe thinking about using the HELOC to pay down on like another mortgage or something like that, and using that strategy to accelerate the pay down of a mortgage. That may be what you were referring to as well. I've seen that strategy play out. As long as you do your homework and make sure it makes sense, and you do need good excess cash flow in your income in order to make this work, because you have to be able to throw this at principal and then have enough excess cash flow to pay down on the HELOC and still live and pay bills and make groceries. So definitely can be a great financial strategy, but it is very important to make sure that your finances fit that strategy. I have heard of it. It can work from what I've seen. It makes sense for certain people, Kent. So let me know any additional questions on the topic or any other topic. Kent says, yes, I sold a property and it is in the process of getting another primary residence. Gotcha. So you're weighing out the propensity of doing a HELOC on that primary residence versus a regular mortgage is what I'm assuming. Yeah, I think that it can work well. If you're doing a primary route, then I would use that capital. Gotcha. Said correct. If you're going to do that, then I would say, what's your investment strategy or your business strategy with the available capital that the HELOC is going to be able to provide you? You buying more property, getting into some other business venture that makes sense. I do think it can work really well. I just think it needs to have a financial plan. I need something that's going to generate revenue for it to make sense for me. Otherwise, again, it can turn out to, even though interest rates are on their way down, HELOC interest rates are typically higher most times than a standard fixed primary mortgage rate would be. So it has to make sense. And I know that you only have to make like a 1%, typically like a 1% interest payment plus some additional fee payment. The HELOC payments during the draw period are typically a little bit less stringent and less demanding, but that's only for a period of time. And eventually the draw period ends and you have a fixed loan on it you're going to have to pay. It could be 5, could be 10, 15 years. So you just want to make sure you have a financial plan to take advantage of that period of time where the payments aren't too bad, the liquidity's there. Let me go get a cash flowing rental property. Let me go invest in my business or whatever other financial, strategy you have that can advance and put money in your pocket or add into your bottom line. But yeah, Kent, I definitely am aware of it. I think it could be a great strategy for sure. Congratulations on selling your property and even being in a position to buy a new one, because home ownership is something that I think has been put out of reach for potentially a lot of people for the next few years. So shout out to you even being in a position where you can even, play around with that concept right now. Anybody else? Kent, of course, if you got more questions, fire away. Wayne, if you're still there, more questions, fire away. Anybody else sitting in the backfield that may have additional questions on the topics that we're discussing, or just general personal finance related questions that are within my wheelhouse? If it's not, I'll be honest with you and let you know. But if I have experience and knowledge on it, as you can see, I will give you an extensive answer. This is an opportunity to get it live. Anybody else? Questions, thoughts, ideas you want to bounce off really quickly? Do you have private consultations? I'm on the East Coast and wish I had a person like you in my state. Thank you, Ken. I appreciate that compliment that was embedded in that. Yes, I do offer one-on-one consultations. I am open to setting that up. We can kind of catch up offline about that. Just as a general overview, I typically will try to gather some information and do like a free assessment for you to make sure that what you are working on financially is something I can really add value to. If it is, then that point we can work out some terms and agreements on private consultations. So yes, sir, to answer your question, I do. And I just like to do a free assessment, and have a series of questions that I ask to get an idea of where you are and what you're looking to accomplish, to make sure before we do any type of exchange of value that I can help you for sure. Okay. So yes, to answer your question, honored that you feel that way. and would love to connect with you. Comments on the actual video, or you can even put your contact information. As a matter of fact, let me give you an email address as well. I do have an email here that I will give you. Let me make sure I spelled everything properly. And I did not. Good thing I checked. All right. All right. That is my email, Kent. That is my business email, and anybody else who happens to still be on and kind of interested in getting some live or one-on-one private consultations set up, Kent, shoot me an email. And I still, if you don't mind, if you want to leave a comment down below, if you're comfortable leaving your email and anything, just so I can make sure that we don't miss each other. I do respond very well to my email, but I know there's occasions where emails can get lost in the freight. So if you're comfortable and want to leave an email, you can do that, or any other contact method you prefer. But you can definitely shoot me an email there. I usually respond within 24 hours to get back in touch with you and get connected, and then we can start working on general assessment, a free assessment, and seeing if we'll be a good fit to work together for a private consultation. Absolutely. Anybody else that's on the live stream, personal finances, personal banking, banking relationships, personal credit, business funding, retirement planning. Honestly, any of you that are in a stage in life, I do have a FINRA investment license, so we can talk financial planning to a degree. Mortgage lending, life insurance, any of these topics that are pressing for you financially, that you don't have a professional already who you're working with, comment down below, chat down below. I did put my email in here, my work email in here, my business email rather in here. So reach out to me, leave a comment or something. Let me know you reached out, because again, emails get caught in the junk, they get lost. So I don't want anybody who might try to reach out to feel ignored. Please also try to reach out to me in email. I will go just a little bit further, actually, for this particular live stream. And I'm going to put a quality cell phone number in here for you guys to text and reach out as well, that I need to double check the number on. I'm drawing a blank, but I'm going to put my cell number in here for you guys as well to reach out on that level. I drew horrible blanks, so I had to adjust. So not gonna always put this out here, but if you popping in and happen to catch it, is you're looking to get connected, I put my email in the chat, and I just put a good cell phone number. That is my business cell phone number for you to reach out. When you reach out to me, any of you catching this, Kent, anybody else, please be detailed on who you are and where you're coming from, in the sense of, you're a subscriber to the channel, your name, anything like that, please, so I know who's reaching out. We get spam all the time and things like that, so I am very leery of that. Please put quality information when you reach out via email, or if you want to text me on the number that I just put in the chat, anybody that's still on the live stream. Personal finance, banking, relationship building, personal credit card, business credit cards, business funding. I can help get decent 101, 102 level conversations on retirement, life insurance, planning around those areas, any of these interests, mortgage lending, any of these interest levels. For any of you that are still stuck around here, put my information in the chat while this is live. We're about to close this up soon if I don't see any more questions come in soon. So, y'all let me know. VTech sliding, I need your help. Welcome in, or thank you for staying in. Let me know what you had in mind when you say you need some assistance. VTech. Anybody else? Questions, concerns, thoughts, feedback? While we have a few minutes left, we're an hour and a half in, so we will be wrapping up soon. Any additional questions? Any additional questions? Business email, business cell phone number is in the chat. If we have any legitimate requests for private one-on-one consultations, that is a thing. Business credit, I got approved for Amex, but U.S. Bank business products I can't get, and so on. VTech, okay. So you got approved for Amex. Congratulations for sure. Great financial institution, but you're having trouble getting approved with U.S. Bank for business products. And when you say business products, are we talking business credit cards, business lines of credit? What are we referring to when we specifically talking about having issues with U.S. Bank, VTech? Let me know in the chat. Anybody else? Any final questions? Any final questions? Gonna be wrapping up soon. Any final questions? Business credit card. Got the SBA 7 from them. I was denied for a lack of business credit. Thanks, Wayne. Of course, man. Of course. You enjoy your holiday as well, and feel free to reach out if you want to connect privately on working on one-on-one consultations. We can see if we can make that happen. Thank you. Enjoy your weekend. VTech, credit card. You having issues with the business credit card. Are you saying you successfully got the SBA 7A loan, or you applied for it and was denied due to lack of business credit? Let me clarify that one for me, VTech. And then on the business credit card with U.S. Bank, you're saying you got denied for that. When you were applying, what was your denial reasons? Do you know? Did you get your adverse action letter? Did you? If you didn't, you say for the card, got the loan. Interesting. Got denied for the card, but got the SBA 7 loan. That's interesting. And so then when they denied you for the card, they say it was a lack of business credit. VTech. Interesting. So if that was the only denial reason, then you can build the business credit a few ways. There are secured options for business credit. So I want you to think about Credit Strong for Business has a product, if you haven't already heard of that. If you don't use NAV already, they have a couple products that are available. That's a couple quick, easy ones that are not too expensive, that are legitimate. And then you can also go to route of building trade credit that will report to the business credit bureaus. So there's the Quill, Ulines, Grangers. There's Crown Office Supply is another good one. There are eCredible. That's just a handful of vendors and suppliers and outright financial, companies in the space that are offering either like trade credit or they're offering direct business credit building tools. So again, that's going to be Credit Strong for Business is a good one. NAV is pretty good and does report. The Quills, the Ulines, the Grangers, the Crown Office Supply, eCredible. These are going to be a few. As far as other secure product, Bank of America has a secure business credit card that reports last that I encountered. There's a few routes you can go if we're talking about business credit being the issue. So if everything else was polished, if personal credit was great, if income was good, etc., projected revenues that we put down, all of that was good, and the only kickback was business credit. And did you apply in an LLC, VTech? Did you a corporation or LLC when you made this application? Was it a sole proprietorship or was it like an LLC or a corporation? like a separate entity, just to make sure that I got enough information as I'm answering this question. So proprietorship. Okay, so that might be a different beast. Everything that I just told you is really more applicable for a separate EIN number under an LLC or corporation. So you can't technically build credit under a sole proprietorship, assuming you're using your own credit, your own social with the sole proprietorship, which is usually the case. You cannot really build business credit because your social is for your personal information. So yes, an LLC or a corporation, you got an EIN for your sole proprietorship. Okay, I have seen that. Not as common, but I've seen it. It's really difficult still. Really difficult. Still not really a separate entity. You can, that separate EIN can potentially shift things around tax-wise, but it's still kind of a black hole when it comes to building business credit. So I would recommend an LLC or a corporation. Much better approval odds. Much better. I had a similar experience with Chase Bank, just for example, where I did a sole proprietorship. Now I didn't get a separate EIN for that sole proprietorship. I used my own personal social information. They approved me for $3,000, and to this day, they still only gave me a bump up to $4,000 on that card, which is fine. I don't really deal with it. It was an experiment anyway. But went back to Chase Bank with a legitimate full-scale LLC, and I've gotten 2 cards over $40,000 in limits. Now, I'm not telling you you're going to get $40,000 in limits or not. That was my financial situation. My point is that I had a much better response and, less kickback on getting approved and getting approved with decent limits. When I say that, it does make a difference if you're applying with an LLC or a corporation, VTech. A sole proprietorship is, even with a separate EIN, is kind of difficult. Banks are just not too hot on those. I actually shot a totally different video around this some years back, believe it or not. I'm sorry, some months back, where I spoke on the difference in applying for a sole proprietorship versus an LLC or an S Corp, and kind of got into the weeds on that. But yes, VTech, to answer your question, take the credit building options I gave you. Hopefully you were able to take those down if you remember what I said. The Credit Strongs, the NAVs, Crown Office Supply, Uline, Quill, Granger, and some of those other trade vendors. eCredible is another one that will bill you and report those payments to the business bureaus. So that's going to be a good route for you to go on the getting an LLC or a corporation established, and then building credit with some of those other mechanisms if you have the excess cash flow. VTech, how much for a one-on-one or mentorship? I do offer one-on-one mentorship or consulting. So as I just explained to Kent, I believe I like to do a free assessment first. If you want to connect on that, I still have my contact information in the chat as far as my business email and my business cell phone number. If you want to text me. I do like to do an assessment basically on, and it's just a basic questionnaire. I'm gonna throw out a handful of questions to learn more about your financial position, where you are and what you're looking to accomplish, just to make sure before we start getting into price and before we start getting into exchanging value that I'm able to actually help you. And so if you want to connect on that, I left my contact information, my business cell phone that you can text, and my business email that I have on my devices, and I respond to within 24 hours, typically 24 business hours, but I usually even check it on the weekends as well. So if you want to reach out, I would love to connect with any of you on one-on-one consulting or mentorship for sure, and work out pricing and scheduling, so we can work out consistency if you want to have that. I do have a little bit of time available for that during the week. So definitely touch base with me, VTech, if you would like to get into that further, for sure. I see we still have some people in the building. Anybody else? Questions around personal banking, relationship building with banks, personal credit, personal finance, business credit, business funding, mortgages, mortgage lending. I can even touch on retirement topics. Okay, VTech, gotcha. Yeah, thank you. I will be honest with you. I am not very responsive if I think it's fake, phony, or false when somebody's reaching out. So please be transparent about who you are and where you're contacting me from. If it's here on YouTube, you're a viewer, a subscriber, a pioneer, and please put that in there when you reach out to me. Just put a little details on it so I can know where you're coming from for sure. Thank you for that, VTech. I appreciate you, Jerry. Thank you for clarifying that for me, because I definitely want to make sure I'm dealing with a real person. Anybody else? Questions while I'm on? Believe it or not, Kent, I see your question. And I am a big proponent of insurance products. I have not really covered it on my channel because YouTube is pretty brutal about deviating on financial topics, believe it or not, as far as me being able to make sure the channel is getting success and getting pushed out there. So, when I even talk about mortgages versus like personal credit and banking and like, relationship banking, personal credit cards, all of that stuff does fine on the channel, given the size of my channel. But when I even deviate to something like mortgages, it just doesn't pass. And I don't think it's anything to do with viewership per se, as far as you guys as the audience. YouTube just acts like it's a totally different genre and push it out. So I have not even tried insurance because I know if mortgages will struggle, I know insurance videos are not going to get out. So I haven't. But to answer your question, I have an active life insurance license in my state. I was licensed in 30 plus states at one point in time. Just because I was an insurance broker at one point in time and was operating in different states. So not to try to sound like the end all be all, but I can talk 101, 102 level with you on different life insurance products, annuities, term, whole life. Infinite banking is something that I have personal and professional experience with and have connections with experts in that field and can bridge in if we get that far. So if you are interested in life insurance products, no specific videos to answer your question that I can think of that I shot on insurance. But if you want to connect one-on-one or want me to potentially give you some kind of personal video response, I also, we can work on any of that. If you want to reach out, when you reach out via email or text to the contact, we can add that into the conversation. I definitely don't mind adding that into one-on-one conversations and any training, mentorship, consulting for sure. Thanks for asking, Kent. Anybody else? Questions? We're doing a good job coming in with the questions at the tail end. As y'all can see, I've been saying I'm gonna get off here for 30 minutes and I'm hanging tough with y'all on a Friday night. So please, if you have more questions, Mike L, my credit score is currently 721. Who do you recommend on credit repair to help take a few items off? I'm gonna assume you mean off your report. It says on my report, but I'm gonna guess you mean help take off a few negative items on your report. Mike L, I will give you my honest opinion, and then I'm gonna try to answer your question with like where to go next with it. I have a good bit of professional and personal experience with credit repair. It is extremely difficult to find legitimate companies in credit repair. I am dead serious and being honest. I've been, a lot of experience with them. Man, you hanging tough in there, S-Bine. I see you, my guy. Mike L, very difficult. The last couple companies that I encountered, or at least the last one that I encountered on a professional level that at least did a good job on getting items off legitimately. And this is not necessarily a direct referral, but you're asking. Crown Credit Pro was a company I ran across and interacted with directly before on a professional level. They did a good job from the experiences that I saw with getting negative items off. I did get a little feedback about them mixing, mingling your personal information on your credit report to kind of get that accomplished. So I cannot completely vet them out as the most ethical in the world. But again, Crown Credit Pro is one that comes to mind. Another company was Fortress Credit, I believe, Mike. But B Maximus, man, sir, you are on the thumbnail and you got the first response, and here you are coming in at the last minute. But shout out to you, man. I'm gonna respond to you in a second. Let me finish talking to Mike. But yes, there's a few companies. That's a couple that come to mind that I've directly engaged with that I'm not vetting saying that to go to them, but I'm just saying that I know that they've done the work. Oh, another one that I can tell you, and I'm gonna spell it for you down in the chat, Mike. Look up Kadam Credit. That's another decent credit repair company that is like legitimate, that has like real representatives, and that I've seen through professional experience and engagement that seems to do pretty good work and is actually accessible like by phone and not just some system or software. Like they're a legitimate company, legitimate customer service reps, a portal for you to do credit repair and upload. This is not any sponsored thing like when I'm referring you. This is just giving you some insight, Mike, on, you asked a couple companies. Crown Credit Pro was one, Kadam Credit for sure, and I think the other one was like Fortress Credit or something like that. There's a owner of that company that does a lot of finance content and decent company. Cool. So hopefully, Mike, that answers your question. If you're at a 720, you can't be too far away. So I don't know what the negative items are, how old they are, what type they are. If you want to go into any more detail on that, let me know. But if you're at a 720, you can't be in too bad a shape. But if you want to expound further, or I can answer anything further around rebuilding the credit or building it out further, or dealing with negative items, just let me know, Michael. And if I answered your question, let me know. Make sure y'all like and comment on the actual video itself. Please go in the actual comment section, not just the chat, and comment and like so this video can continue to get support on the replay once it is posted. B Maximus, sir, if you are still there, I'm late, watching from the beginning, not live. Just wanted to say thank you. I'm now going to listen and focus. All right, my guy. If you're going already, thank you for coming in. You definitely helped to inspire this when I already was on this topic, and you asked that question the same evening I was coming up with this topic. So you got the thumbnail, and you asked a great question. I did answer it, and you will get that information early on. All right, Mike. Got you, my guy. Any other questions you might have around anything, please comment down below. I'm willing to hang a few more minutes with y'all. Mike L, you included. Let me know if you got any other questions. Personal credit building, business funding, not necessarily credit repair, but if you questions around negative items on your credit report, questions, I can definitely give a little insight on that. Let me know if y'all got anything else going on. Going on 2 hours strong, y'all. 2 hours strong. Like and comment on this. Support this video. Let's get the replays up. Let's make sure this one, the first live stream did not get a ton of replay. It was my first go around, so I can understand the first few minutes were rough, but we did a better job on this one. We got a lot of information in this one as well. A lot of good questions, topics, a lot of good info, y'all. So make sure that y'all support, share, like, comment, subscribe, push this out so we can get it out to more good people who need guidance in a rough, turbulent economic times that we're in. Let me know. We're going on 2 hours strong, staying dedicated with y'all. So, y'all invest in me, and I'm gonna keep investing in y'all. Any other questions? Anybody else? If I don't see anything in the next couple minutes or so, I'm gonna wrap it up. But if I do see any questions, I'll take a few more minutes with y'all. Any other questions? Anybody need any guidance, any direction, want to bounce any ideas off while you have me? Let me know. Let me know. Anybody else that's on? We still got some people sitting on live with me, so I want to know any questions. Any questions? Mike, what is my favorite credit card that you're currently using? Great question. So I'm going to give you a personal credit card response, and a business credit card response. So you're gonna get a little bit of a bonus. On the personal credit card side, I am using the Amex Hilton Aspire currently, and I'm gonna kind of go in the weeds and get my wallet out here. I'm using let's see if I can protect my little information, yo. Y'all can see using my Hilton Aspire. On the personal side, Mike, my Hilton Aspire is my favorite right now, and that's for various reasons. I love racking up the travel points towards the Hilton hotels, especially with me. I'm working towards taking some trips and doing some footage and some filming, and I'm looking at rack up these points for these resorts, and it's just a great card for rewards. And travel perks. So I'm loving the Hilton Aspire right now on the personal side. It is a big boy card. I think the annual fee is like $500 or something like that. So it is definitely a big boy card, but I'm enjoying the Hilton Aspire on the personal side. The Navy Federal flagship is my personal second honorable mention card. It is a great catch-all card on the Navy Federal flagship. I have that one in here as well. So that's my top two, if you want to call it that. And I'm using those kind of interchangeably at the moment. So I think that's all the information there. Flagship, Mike. And then other than that, I am looking at the Chase Ink cards on the business side, Mike. The Chase Ink cards, I have like 2 unlimiteds, and I know that's not the sexiest in the world, but they're just like right now my spending for business is kind of all over. So they're just good catch-all cards on the business side so far that I have. I have 3 Amex business credit cards, and they're okay, but I'm liking the business Ink Chase cards, 0%, decent rewards points, and just overall solid cards. Mike, as what is it again? The Hilton Aspire. So there's 3 Hilton cards with Amex, Mike, and it's the Hilton. The first one, the Hilton Honors. So it's the Hilton Surpass, the Hilton Aspire, and there's a business Hilton. I have the Hilton Aspire on the personal side, and I have the business Hilton on the business side. And man, I want to do justice to the first Hilton card, but there's 3 of them. There's an entry-level Hilton card. I can't think. I was like the Hilton Silver, Hilton Honest. The Hilton Surpass is the middle. Hilton Aspire is the big boy, and the business Hilton. I have the Hilton Aspire is my personal favorite, and the Navy Federal flagship is the second one. And then I have a business Hilton card as well. Gotten some great rewards points towards my Hilton stays with those, and they're good rewards points, period. And I don't mind them being redeemed with Hilton. So I have those 2 with the Hilton. Yes, Frank, the Hilton Aspire. And then the business Ink cards on the business side. I'm just haven't really gone too hard on the cash back and travel hacking on the business side yet. I just been focused on using them for my cash flow management and a little excess capital to get things, keep things pushing on the business side, Mike. So haven't really gotten as deep as I have on the personal side with like really in-depth, great business cards for rewards points. So right now the ink cards are simple. I still like my business Hilton, and I have the Blue Business Plus, the cash on the Amex side as well that I like. So yeah, and the GM business card isn't bad either. It's okay. Any other questions? We got some good ones coming in late. Anybody else? Any other questions? You can add, just like Mike did, if you got any questions that I'm comfortable answering, around what I have going on, cards that I have, plans I got with cards in the future, I'm willing to answer that information. Y'all let me know. Anybody got questions for themselves to assist? And welcome in, Frank. I don't know how long you've been in. You kind of jumped in and backed me up on that one a little bit. Welcome in, Frank. Thanks for being in. Anybody else? Questions, thoughts, comments? Going 2 hours strong, y'all. 2 hours strong on a Friday night. Two hours strong. Any other questions, y'all? Any other questions? Anybody else? Any thoughts? Any questions? Any, curiosities? Personal credit, business funding, mortgage lending, relationship banking. We can even lean into retirement if anybody's in that stage and they want to talk a little bit on the surface of retirement, life insurance products a little bit. Not gonna go too far on those, but we can talk about any of that. I'm willing to, this is a good opportunity. Plans for 2025. What are the financial plans for 2025? Relationship banking, personal credit card, business credit card goals, business funding, mortgage lending, acquiring real estate. What anybody want to comment? Any questions, any thoughts? Anybody want to put out what their plans are? Anything? Anybody that's left? We still got a decent amount of people, relatively to the size of the live stream, that are still here. Any questions? Anybody else? We are over the 2 hour mark, so it's a Friday night. We getting it in, showing that dedication. Anybody else? Give y'all another couple minutes and see. Mike L, last question. What do I need to do to get into business credit cards? I currently have the Amex Gold and all 3 Bank of America credit cards. Great question, Mike. I would need a little bit more information. I don't need you to put all of that in the chat to be really specific to your situation, but I will still give you like a framework if I was just talking to somebody in general. So with business credit cards, they are underwritten a little differently. You can attain them through sole proprietorship, which we were kind of touching on with VTech earlier a few minutes ago. You can also go LLC corporation route. As I just was explaining to VTech, it is much better and banks are much more enticed when it is an LLC or a corporation because they are looking at you for long-term viability as a consistent user. So sole proprietorships just don't typically tend to be high spenders. They don't typically tend to be real fully scaled operations. And so that's not the most attractive to them. So the first thing I would tell you is when you go in that route, LLC or corporation, for legitimate reasons, going through the headache and the hassle of creating an LLC or a corporation, especially legitimately, might not be worth it just to get business credit cards if you don't have a plan, but you will get better responses and results if you go LLC or corporation, Mike. The next thing I would tell you as far as structuring your finances and painting that picture when you're applying, have a good stable income that has a good spread or a good DTI, meaning when your credit report is pulled and they reference it to the stated income on your credit application, make sure you have good wiggle room. If they pull and you got a mortgage, student loans, auto loans, etc., and all of that totals up to $4,000 a month, and you only make $5,000 a month, you put $60,000 a year on your application, which averages out to $5,000 a month, you're gonna have a hard time getting a business credit card. You need to have breathing room on your personal expenses from your income. So good DTI. I use the numbers of saying like 30%, meaning that whatever your gross is, your monthly reported debts on your credit report shouldn't be more than like 30%. Could you be a little higher than that and still get approved? Possibly, but 30% is just a good metric for DTI, debt to income ratio. The next thing I recommend is about a minimum of a 700 credit score, FICO, Minimum FICO 700 credit score in this economic climate is about a good baseline. Can you get approved at a little less with other factors working in your favor? Yes, you can. Do you want to take that gamble? Maybe not. Income is the only other thing that can offset not the best credit. If you don't have, you're like 670, 680, 690, you need to have a really good income relative to your expenses and relative to like your, where you live in your industry. You know what I'm saying? The next thing other than that, you're going to want to have a decent credit profile. Business credit cards are not entry level. So they don't want you to have your first 2 credit cards a year ago and then you go for your first business credit card. You're going to probably get denied. You need to have a decent established history, 3, 4, 5 years at least of credit history, 3 to 5 other personal credit cards that you've had. It sounds like you have 3 to 4 already at least. And if you want to have about $5 or more thousand in limits on those cards that you've had to crack into the business credit card world, the better and higher the personal credit card limits, the higher the business credit card approvals are likely going to be. That is a comparable credit factor, meaning that you manage credit card limits of 5, 10, 15,000 on the personal side. We might be comfortable along with your other data to give you a roughly comparable limit on the business side, or maybe even a little higher if you have attractive metrics on your application. So 700 or higher personal FICO scores, really good income, DTI in a good place, existing credit cards with low utilization at the time of your application, and hopefully historically. From that point, I would also say, I see you asking about no PG business credit cards, Frank. Give me a second. I got you. And good credit card usage is in low utilization. Good limits, 5,000 plus is a bare minimum, I would say, Mike. And then low inquiries would be ideal for most institutions. So not too many fresh inquiries, and fresh being like anything more than a couple to a few on a given bureau that they might pull from in 6 months times to a year, give or take. You can get away with more. This is just kind of a safe baseline. And then making sure the LLC or the corporation is identifiable and verifiable. It's good with the Secretary of State. EIN is good. Address is aligned. The name of the business is spelled out properly and aligned. Ideally, a business phone number, and a business email looks good, but you can get away with a home address or some other kind of address, virtual address, and a personal cell number. I have seen it work, but you just want to make sure when you go in, if you want your best approval eyes, I'm just giving you a framework, Mike. So that's just kind of a general framework that should get you in the door. Relationship banking helps a lot with business credit cards, meaning that you have a existing standing personal relationship with that institution. They've seen you manage your personal accounts and maybe personal credit cards. They are much more likely to be lenient and flexible and more enticed to get you into the business side. So that helps. But if you go into an institution code that you have no other banking relationship with, just make sure your other metrics that I talked about are covered really well. That's not every single thing, but that is a really good framework that should get you in the door on business credit cards. Let me know if you have any other additional questions or if you've heard of something else I didn't mention that you want to ask about on that, Mike. But what about the no PG business credit cards? Can you shed some light on that? Okay. The only no PG business credit cards, Frank, that are really out there for the most part are going to be fintech charge cards or revenue-based type cards for the most part. You are not going to find, of course, Mike, thanks, my guy, of course. Thank you for asking some great questions. Feel free if you have any more while we on too. Thank you. Frank, fintech business charge cards, and there might be some one-offs from real financial, full-scale financial institutions, but no PG is pretty much a fintech thing for the most part. It's revenue-based, meaning that they're gonna plug into like your business accounts and check your revenues. You have to pretty much have. So let me put this framework in there for you, Frank. And you may have heard this before, you may or may not. In the financial industry, it is understood lending is based off of some form of collateral. And that can be credit, cash flow or cash reserve, or tangible equipment or buildings or structure or something tangible of value for collateral. When it comes to the no PG on business credit cards, if they're not asking for you to put your personal credit behind it, like the vast majority of full-scale financial institutions are going to do, then they are leaning on something else out of that bucket. So if credit is out and business and personal credit isn't necessary to do it, they're not going to assure you that they're looking for revenue, cash flow, or some kind of equipment, especially revenue and cash flow when it comes to business credit cards. So fintechs are really the only ones that are really in that market for the most part. I'm not saying no financial institution exists, like full-scale financial institutions exist with it. I can't think of any off the top of my head, but I can tell you right now, like there's confusion around the Amexes, Chase Banks. These, can you build your business credit up in a way where you can get to no PG with these types of full-scale institutions? I'm telling you, as somebody who works in the industry and I shake hands and do events, with these colleagues at these various institutions, I'm like in the space. I'm telling you, it's not a thing. If you are hearing any misinformation about building up a bunch of business data points and walking into Chase Bank or applying on Amex or Wells Fargo, Bank of America, and getting a no PG business credit card out of the gate with nothing else on the table, not a thing. You're going to have to put down a personal guarantee with the vast majority of full-scale financial institutions. But to answer your question and put a little light on it, most of these like Divvies, Rev, I think it's like Brexit or something like that, Brex or something like that. There's a few of those fintech companies that are very revenue based on no PG business credit cards. They're cool. They don't do really well on rewards points. And again, they're revenue dependent. So if you don't have an active business that's 6 months or older with good revenues coming in, then you're not really going to have access to them most likely. And again, they're really more like charge cards. So you don't have that 0% benefit, the ability to stretch out your cash flow. They're not the sexiest thing in the world, Frank, to be honest. But that's my professional and / business opinion, like somebody who's been in the space professionally and also working with my businesses and dealing with business credit cards and stuff like that. I'm one person, but I am going to be honest. I'm somebody that's pretty deep in the space. That's my perspective on it. There's not really many full-scale institutions offering no PG business credit cards, if really any at all. And the ones that offer it are like fintechs, and they're not that attractive. They can work for some businesses really well, but they're not that hot. So hopefully, Frank, that answers your question. Let me know if you heard anything different, you have questions or kickback, or if you agree, or if you just got more questions in general about business credit cards as a whole. Let me know. We still got people sitting in, so obviously you guys are still engaged. What questions does anybody else have? I said I was getting off of here an hour ago. I'm still here. So anybody else, what questions do we have before we get out? As you can see, I am more than willing to jump in with y'all. What are a few of your favorite finance-related books? Any sleepers? Ooh, Wayne. Man, I probably can get up and go to my bedroom right now and grab a few books that I've read that have been really valuable for me. I'm gonna see if I can answer that off the top of my head. Millionaire Next Door was cool. Napoleon Hill's books were good. I haven't finished or dove all the way into Warren Buffett's books, but I've enjoyed what I've come across. I'm more on the audiobook side, by the way, when I answer this, Wayne. Okay, Frank, for sure. Thank you for answering. I'm glad I was able to put some context on that for you, Frank. Absolutely. Yeah, Wayne. Sleepers, probably. I'll be completely honest with you. I am less than 20 books read in the finance space. And out of that number, somewhere between 10 and 20, mostly it's like really, really practical books. So like outright mortgage lending for dummies type books. Like I like to get into the weeds of really practical stuff when it comes to finance. So the theoretical books, the life story biography books that like, the Warren Buffett telling his investment strategy story, these are great. The Millionaire Next Door is good. 4-Hour Work Week. Like some of these other books are good. I've kind of either read them or audiobooked them and enjoyed them. But I have gotten most of my information from much more practical. I literally, no exaggeration, Wayne. I literally, like, the book that I had to study for my FINRA investment license, like my life insurance book, the books that I had to actually study to get my licenses. I read those books. I still read those books and reference back to those books. Like, it's just, I'm just one of those people that if I'm going to hear about a biography or somebody else's investment strategy, or I would prefer to see that in a presentation or video form. I'm not as hot on reading that in books, though there's some good books out there. And then when it comes to, I'm looking for like raw information, data points. Like, so I'm the kind of guy that's basically reading dictionary equivalents or encyclopedias in the finance world. Like, that's my kind of books. So it's really for dummy type books, or the FINRA books, economic books. You know, I like to get in the weeds on like how capitalism works, the various forms of capitalism, roots of capitalism, because again, that's really the basis to the psychology of where the financial tools and products in the banking system we're in come from. So I like to get into that kind of stuff. So hopefully that gave you some context. If you're really curious, I can give you some more detail. But I have read some books on like dividend investing, real estate investing too, that were pretty good. But yeah, Wayne, great question, really good question. But I am not one of those people that, I've read all of these great books by, Rich Dad Poor Dad was pretty good. I think all of us have come across that one. But I'm not really that guy that likes to. I'd rather go in video form, presentation form on people's like financial strategy. Of course, Wayne, for sure. I'm glad that answered your question, because I know it was kind of like boring, but that's just the guy's honest truth, man. I read my FINRA book front to back numerous times when I was studying for it and after the fact. My life insurance book, mortgage, and all that stuff. Give me the practical, raw stuff that's really getting applied. That's my thing. So any other questions? We still have a decent amount of people that are still on here. It is not dry. So anybody else, man, we are 2 hours plus strong. And I've been sitting, I'm just getting off this thing an hour plus. So anybody else, questions, thoughts, curiosities around the topic? Anybody else? Anybody else? Personal finance, business finances, business banking. I haven't heard a lot around that. Any questions on business banking? Personal credit, mortgage lending, retirement, life insurance products. Any questions? I know you guys are participating in this finance space. You're studying, you're watching channels like mine. So I know y'all have a lot going on in the finance sector. Any questions while you have me live? It's once a week right now. We're on track to do these lives. Fridays, 7:30 p.m. Central Time, 7-ish. I try to put it out earlier in the week so you guys are privy to it in post, community posts and stuff like that. But any of you who are still on, we're doing these live streams. I plan on doing them on Fridays around 7:30 p.m. Central Time, Central Standard Time. Adjust for your time zone. 7:30 p.m. Fridays. I'm trying to cover any questions that I get and then topics that I think are relevant or pressing based on my expertise and my financial objectives and that of my audience, you guys. So stay tuned in on a weekly basis to all the videos, but the live streams are about to be a thing for a little while. If I feel like they're being received well going into the rest of the year. So Fridays, 7:30 p.m. Central Time. Get your questions answered. Listen to me cover some very pressing personal finance, business finance, economic topics that will help you advance, directly contribute to you advancing your personal finances and increasing your net worth. That's what I'm all about. Relationship banking, maximizing your borrow capacity, helping you to own more real estate, helping you to have proper use of life insurance when we get into those topics, etc. Estate planning, planning your, retirement. My goal makes me unique on this channel is I'm literally one of the few guys in the personal finance space that actually does it for a career, not just somebody who stumbled across this stuff and followed some other YouTuber. I'm literally in the personal finance. I'm literally a banker by trade, literally financial services, insurance brokering, mortgage broking. I've done it. So you're getting this information and you're watching this channel with somebody who's literally done this for over 10 years. The bulk of my working career has been in this space, and I am knee deep in it. Community engagement. It's not just working in my institution in the corporate world in the office and that's it. I'm actually out in my community, like I'm doing with you guys on this live stream, helping business owners in my community, helping kids, helping young adults coming through. So you're getting this information from somebody who's knowledgeable, legitimate, ethical, and actually cares about you moving forward and trying to make it better for all of us when it comes to our quality of life through our finances. So it's my elevator pitch, a little winded, but that is who you're getting this information from. We still got a few people in the building. Questions, concerns, comments. We started this off around personal banking relationship, building our banking relationships and personal credit card strategies. Let me know. Please let me know what questions you have. Personal credit building, business financing, business funding, mortgage lending, banking, personal business banking. Let me know what questions y'all have. We still have people in the building. I see thumbs up starting to pile up, comments. P&R Connected, man. My guy, you back in the building. I remember you from like you were in with me last Friday, hanging tough. Good to see you again, my guy. Good to see you again. You got any questions for me while you're in? Let me know what you got. Thanks for letting me know you're here. Let me know if you got any questions or curiosities. Y'all let me know. Let me know. Let me know. Y'all let me know. Any questions? I'm staying tough with y'all on a big old Friday night. I see a few of y'all dropping off. I see a few of y'all still hanging in. So any questions? 2 hours, 2.5 hours, y'all. Any questions? We getting it in tonight. Business finance, business funding, business financing, personal credit cards, relationship banking, the economics, interest rates, Fed Reserve. I respect that, P&R. I appreciate you taking this time out on your evening, your Friday night as well, my guy. So I'm glad. Hopefully you're getting some great information out of this. Hopefully you've been in long enough to get some of the topics that were covered before I dedicated to questions. I did cover personal credit cards, credit card strategies for 2025. The kind of lightly touched on the economics of the Federal Reserve dropping interest rates and how that works and how that's going to affect things. You got any curiosities? You want me to recap anything while we have a few minutes? I'm willing to give y'all the time tonight. So y'all just let me know. Y'all let me know. I'm going to get a little bit of water, y'all. So y'all let me know. Hold on. Let me get a bottle of water. Kent, enjoy your holiday weekend. Sent the text email. Catch up with you later. Okay, Kent. I got you. I may touch base with you tomorrow, Kent. I got you. I see you in here. I see you, Kent. I got the phone right here. I see your text message. If you're still on, by chance right now, I will catch up with you possibly tomorrow. I have a pretty busy weekend. The very worst case scenario, I will touch base with you probably Monday or Tuesday. But I got you. And I will, if you're not still on here, then I'll reach back out on the phone. Anybody left? Anybody? I know we still got some people in the building, y'all. Likes, comments on the actual video, thumbs up, support the content, personal finance, personal banking, business banking. All right, that'll work, Kent. I didn't know if you were still on. I got you. Monday, Tuesday works. We will touch base for sure, and I will get you that assessment out and let you know what questions I have so we can move forward. Stay safe and have a good one, Kent. Anybody, any questions, again, personal finance, banking relationship building, personal credit, business funding, mortgage lending, retirement conversations, getting estate planning and retirement together, any of these types of questions while you have somebody on live who's willing to give you a few minutes of their time. I'm 2.5 hours in. And I am willing to give anybody else any time if you got a legitimate question. But if not, we're about to wrap it up. Couple minutes left, y'all. Couple minutes. I appreciate y'all, man, that hung on this one too. This was a long one today. This is probably what they're gonna look like, though. I want to make sure I cover the topics and I answer questions, so they're probably gonna be pretty long, y'all. Anybody else going once, going twice? It's getting late, so any final questions, thoughts, insights before we wrap this up? Next Friday, 7:30 p.m. Central Time. Adjust your time zone. I will be putting it out in a community post to promote it, and you'll probably know the topic probably by Tuesday, Wednesday, Thursday at the latest. I'll make sure that the topic is out there so y'all can have questions or y'all know what's going on for next week. Comment any questions in the chat. Comment on the actual video. Thumbs up. I see y'all running up the likes. Thank y'all. Continue to support the channel so the channel can continue to support you as always. Any following questions before we wrap up on this Good Friday night, y'all? 2.5 hours. 2.5 hours. Credit cards, personal or business credit cards, banking, relationship banking, building connections with financial institutions, retirement, mortgage loans, anything. Any additional questions, y'all? Any additional questions? Y'all were tuned in tonight, man. I appreciate y'all. A lot of y'all hung in there tough. I'm gonna get ready to wrap this up. I don't see anything else coming through the chat. Anybody like trying to plug it away? Let me know. Send me a signal. We on our way out. All right. I don't see anything going on. We're gonna get ready to wrap this up. Y'all support this, on the recap. Share this, push this out. A lot of good information in here, a lot of questions answered. Y'all push this out. Like, comment, subscribe. Continue to support these live streams just like you support these standard videos that come out. As always, y'all are a great community. My committee, my pioneers, y'all are financial pioneers, and I call y'all that because you are most likely pioneering your way to financial success that most of us have not seen previously in our family. Most of us are the first doing it. So that is where that concept comes from, and I appreciate every single one of y'all. If you have any additional questions, just leave it on the comment section of the actual video. I do read all of my comments. So if you don't catch this live stream chat on the way out, then I want you to just leave it on the comment section. I did leave my contact info in the chat, my business email and my business cell phone for y'all to reach out. So let me know if you need to contact with me. If you want a deeper dive, one-on-one consultations, I am taking a few of those for the foreseeable future. I'm making room for a few of those. So y'all let me know. Other than that, as always, I want each of you to stay focused, stay in motion. I'll see y'all soon.